should you have money invested in these hybrid style investments? If you're between 5 and 10 years from retirement, these are very important things to take into consideration because there are no do-overs in retirement. Over the past 2 decades, we've seen several mistakes out there. We want to make sure you are avoiding it, become a more informed consumer. So let's talk about these hybrid investments and what their purposes are. So there's 3 categories when it comes to investments. Let's start off with the first category, and that is your safe investments. So you can place monies that are in money markets or CDs or even treasuries, T-bills. The advantage to these investments is they're safe, but obviously the disadvantage is they do not keep up with inflation. But I want you to stick with just purpose for these monies is just liquidity, safety. The second style of investments are what we call these hybrids. And I'll get to kind of why you should consider these things, but you can buy a CD that is linked to the market. So yes, you'll have gain of the markets. You won't take any risks on the downsides. There are equity index annuities. Please be careful on those. Also with riders, you want to stay away from income riders for the most part because their additional cost to the policyholder will limit your earnings also. And then you can consider buying TIPS, which are a Treasury inflation protected security. And then the last, which we all know about, which are growth style investments. You can go out and buy stocks, you can buy bonds, real estate, ETF funds. So the purpose behind these investments are designed for long-term growth. So why on earth would you consider these hybrid style investments? A lot of times I see insurance agents sell them because they tell people, hey, look, when the markets go down, you should put all your money here for safety, avoiding risk. That is actually a big mistake. Number one, let's get this out of the way. You should have some money towards the markets because historically it will always come back and be ahead. Number two, there's one rule when it comes to compounding, and that is it must be left undisturbed in order for it to work effectively. So how can I create that method of leaving it undisturbed? I have a hybrid in place to provide me the income, and even if I'm spending down a little bit of principal of that money, or even if I spend it all, it is going to be okay because this portion of my investments were growing that will recapture what I spent here if done correctly. So the hybrid investment is not just for you to protect principal. It is actually more importantly designed to protect your growth. And that is structuring it so that as markets do get compressed and they move up and down, you're not panicking and selling. So you're keeping discipline by structuring it this way. So there's a lot of what ifs out there. What if the markets have a bad year or 2 years? That's why you structure this. Hopefully this has been helpful for you. One of the things I suggest is you sit down with a seasoned advisor who is a fiduciary, who's going to go through multiple criteria points and design it and customize it around you. So the plan is not boilerplate. It is not a set it and forget it. I cannot emphasize enough that strategies, once they're implemented, they must be reviewed and making sure your progress is being met. If you want to get some more information, please feel free to reach out to us. Click on the links below to get some additional information that will be helpful for your retirement. I want to thank you for your time today.